The Avalaunch transmission starts now.
All right. Hello, everyone. Mark from Avalaunch here. Today we are joined by the Aero Market team, Patrick and Ed, who are co-founders. And this is obviously the next Avalaunch IDO. We're really excited to be able to work with these guys and support these guys. We've known them for a long time, been really interested in what they're working on for a long time. And it's really great to finally see this take the next step in its journey. So thanks a lot for joining us here today, guys.
Thank you. We're actually really excited about doing this on Avalaunch. You know, like you said, we've kind of known each other for a long time and have been kind of, building in the Avalanche community for quite some time. I remember during the first Avalanche Summit in Barcelona, you let us use your booth. We kind of hijacked your booth when you guys were gone, and so we've been working closely in one way or another over the years. So it kind of seems fitting that we do the token launch through you guys. So
Yeah.
I'm very excited.
Right on. And I've told you guys this story, but I think it's worth repeating here that before we started Avalaunch and we were kind of looking into the Avalanche ecosystem and diving in and seeing what kind of building was going on, you were one of the first projects that I came across. And in the back of my mind, said to myself, if this is the kind of project we can work with, and these are the kind of projects that we can help launch, this is absolutely the ecosystem that we want to be in. So I just think it's really cool to kind of finally be here and have this stuff come full circle. But just to jump into it, I think it would be helpful for everyone listening to just get a little introduction on each of you and your background. And you've been working on Aero now for a few years, and so this is kind of like your background in some ways at a point. But just your history and what brought you to Aero and how your work prior kind of dovetailed into this protocol.
Yeah, it's a great question. I'll kick it off and say something brief, and then kick it over to Ed. I like Ed. I have an academic background, so I did my PhD at UCLA Anderson at the School of Business. I did a PhD in finance. Taught MFEs for a little while, and then got worked as a quant. Actually, a friend of mine who also did his PhD at UCLA had a startup, and he hired me. That was kind of my first quant position after I finished my PhD. And while I was there, I was helping him build out a lot of kind of the infrastructure that he needed as an early stage startup. And I really kind of was able to get my hands dirty doing software development in addition to a lot of the financial modeling and the quant work that I had done before. And that was kind of the beginning of this interplay between financial modeling and software development that led to the birth of Aero, frankly. And so I worked as a quant for about a year, and then Ed and I, had been talking about some of the exciting developments in Ethereum and programmable blockchains, and so we attended the IC3 conference at Cornell, where Ed was pretty plugged in and knew a lot of the people there, and at that conference we built kind of an initial simple version of Aero Markets, just a simple smart contract circuit to implement, as much as we could get in terms of an options trading circuit during the course of the hackathon. And, while we were there, we got a lot of support from people in the Avalanche community, a lot of positive feedback, and just kind of ran with it and haven't looked back. And then, over the past, like you said, almost 3 years at this point, we've been doing a lot of, development work, a lot of kind of learning what matters most in practice. And I think after this amount of time, all the work we've, been able to do, we actually, we're really excited to have a product that we're rolling out at this point that I think reflects all of the lessons that we've learned over the last 3 years, and I think really optimizes on a lot of important dimensions. So that's a quick thing about my background and kind of how it we got into Aero Markets.
Awesome, and we'll get into how things have evolved and changed. I think that would be interesting. But what about you?
So my background, as Patrick had mentioned, I was doing my PhD over at Cornell University in financial economics. And I'm doing research that is really, and continue to do research that's at the intersection of finance and AI, actually. So there's a lot of interesting applications, a lot of cool stuff that even on blockchain can be the future there. And a lot of what we were exploring in the early days um, had to do with some of that. And Arrow Markets, as Patrick said, came about because a lot of what was going on at Cornell at the time, there was a lot of excitement through Goon's team, Neiman Goon's team, because they just developed the white paper for Avalaunch, and that was at the forefront of an exciting new consensus mechanism that was just blazing fast and could be shown, provably shown, to be extremely efficient. So I was pumped at the time. Um, I got plugged into that community at Cornell, made a lot of connections over there, and started getting excited about the potential of these connections between finance, between blockchain, and even between AI in a lot of sense, even back then. So I think that there's a lot of excitement in all of these fields. There's a whole new wave of change that's coming, and we're excited to be at the forefront of that. Now, like Patrick said, in building the system, we have found a lot of different challenges. And this has been something that over the years, we've figured out ways to kind of get incrementally to our visions. And that has changed over time, that has evolved. So we're looking forward to getting into that and discussing how Arrow Markets is planning on bringing that next wave of DeFi to the public and to the forefront of what finance is really capable of, and open up those doors.
Cool. And how did you guys actually meet originally?
Oh yeah, so we were actually at UCLA beforehand as undergraduates and master's students, and that's where we met and we kept in touch from then on.
And when you guys decided to build these initial contracts, and did you think in your mind, were you already of the mindset that, hey, we want to have a project, we want to work together, we want to build a startup? Or was it more at that point on the kind of exploratory intellectual pursuit side of things? At what point did you say this is where we want the direction of our lives to be headed?
Yeah, it's a great question. I mean, I think for me, it was kind of both. It was, here's an opportunity to explore and kind of push along some of these key dimensions and see what type of progress we could make. And obviously, during the course of doing that, being open to parlaying some of that work into a venture. And so for me, I thought, of course, it's interesting. From an intellectual standpoint, these are problems that we'd like to tackle. They're interesting on a standalone basis, but clearly, if there is some market need for this, being able to parlay it into a venture was kind of always a possibility in our minds. And then I think as we started kind of taking meetings and talking to people about what we were building over the few months following IC3, it was clear that this was an opportunity to convert this into a venture.
Yeah, so some of that was really exploratory in the beginning stages because, as Patrick had mentioned, both of us had some experience in industry, and we see a lot of the inefficiencies that arose there. And when we were coming to blockchain, there was this question, well, how can some of these efficiencies be addressed? Is it even the right tool, or are people going out there and just kind of that hammer and looking for a nail, and finance is fine the way it is? And the answer to that is actually quite complicated. There are certain things in the financial system that are efficiently inefficient. Let's put it that way. Borrowing a term I really like to use. But on the other hand, there's a bunch of things that are closed, restricted, inefficient, et cetera, et cetera. So those aspects exist, and in that time that followed that IC3 competition, once we were doing that exploratory work, we hit on those, and we've been over time just discovering more and more of them, to be honest, on both sides.
Mm-hmm. Cool. Yeah. Well, okay. So I mean, just in talking through these kind of first couple of points, there's a lot of interesting stuff coming up. I'm just making some notes, so hopefully we can get to a lot of it. But let's move like right into the protocol. I mean, maybe you could just tell us a little bit about the other folks working on it, kind of like what the composition of the team looks like. Why those people are critical and in place. Resources aren't infinite, and so I think it's interesting to think through who's working on what and why. But then, what is Arrow? What problem is it solving at kind of the highest level?
Yeah, it's a great question. I can speak to a couple of our teams. Obviously, we've been able to put together some really solid teams kind of along multiple fronts. I work most closely with the devs and the quants, so I can speak a little bit more about that. We have so first of all, our team is very small, but we have a very, very solid team. It took us a little bit of time to find the right people, but once we found the right people, we did what it takes to kind of make sure they were happy and keep them in place. And so we have an incredibly productive team of devs that we've put together. It's 3 back-end devs, 1 full-time front-end dev, and another full-stack guy that can kind of help us with anything. And then our quant team is really off the charts. It's obviously myself and Edward, but also we work closely with a good friend of ours, Jeremy, whose other job is at NASA. So Jeremy works at NASA by day, and then helps us with some of our quant tooling by night. And then we also have another phenomenal quant that we work with very closely, named Ata, who actually lives in Istanbul. We are a very global team, by the way. Our devs are spread around Asia, Africa, Europe, and the US. So small team, but spread around the world and kind of handpicked, and all people that we're very excited about, very, very sharp and very productive.
Mm-hmm. Mm-hmm. Cool. And just really quickly, and I just keep wanting to ask this. When you say you were a quant, or you worked for a year as a quant, and you're responsible for the quantitative stuff on the project, I think a lot of people use that word, throw it around, and then just to sort of assume they know what people are talking about. I'm just interested, how broad is that term? What does that work look like? I mean, I'm assuming it's pretty specific to the project itself, but maybe you could just tell us a little bit about what working as a quant looks like.
Yeah, it's a great question. It is a very broad term, and so a lot of people mean different things when they say quant. I think fundamentally it means doing some of the very technical mathematical modeling work required to make portfolio allocation decisions, make forecasts about what future asset prices will be, and all of kind of the mathematical and asset pricing modeling work that goes along with kind of making those assessments. And so at Rayliant, which is where I worked as a quant, that was a kind of macro equity fund. So the quant work that I was doing was researching quant equity trading strategies. And so, basically the way, at a very high level, the way those work is you want to look for subsets of stocks in the market who you can associate with particular signals that allow you to kind of rank them in terms of how long or how short you want to be. And then you just kind of, you turn this analysis into a dynamic portfolio strategy. And so that's what we were working on at Rayliant.
Got it. Cool. Thanks. Yeah, I just wanted to touch on that. Go ahead.
What else is so interesting, Mark, is that there are different quant toolkits for different areas of the market. And Patrick and I had come from either like the equity side, or in my case, the global macro side, and had experience there. And in those cases, the difference in tooling with what you use, for example, in options markets, is surprising. With options markets, it's less about constructing a portfolio that focuses on certain signals, and you try to get an alpha in that way. And it's more about understanding what the overall risks that are present are, and then hedging yourself in a particular way. And then offering contracts above the costs of your hedges for the prices that would compensate you for those risks. So it is a really, really huge field, and it's growing every day. So it is hard to characterize in a paragraph or so what quantitative finance is, but you have different strategies, and it really is approaching the market in a scientific way, as scientific of a way as possible, but understanding that you can't do something like a closed experiment. You have to just take these kind of natural observed histories and try to find patterns through the models that you implement.
Yeah, pretty neat.
Yeah.
Pretty neat.
I mean, that's a great point. And there's kind of, just to build on that quickly, there's a ongoing kind of controversy in the kind of equity quant trading community about the so-called value premium. And what people have done is they've done these kind of historical tests that have shown if you rank companies based on this value metric, you form long-short portfolios, then returns on these long-short portfolios have historically kind of very appealing return profiles. And so over the past 10 or 12 years, companies like AQR, but also to some extent Rayliant, where I was working, have just been betting everything that this kind of value premium will reemerge in markets, but it hasn't for the most part. There have been kind of little periods where value earns a premium, but for the most part, it's just lost across the board to growth. And in my interpretation of this is tech is just driving value in the macro economy. So these growth stocks are just continually outperforming the value stocks because these tech stocks are just becoming more and more productive, things like AI and so forth. But you have people who are just completely committed to implementing these value strategies because they have worked historically in the past. And to Ed's point about the scientific analysis, you have to ask yourself, what assumptions are you making? One important assumption you're making is kind of the underlying data generating process, the underlying kind of macroeconomic equilibrium has not changed, which kind of just doesn't pass the smell test. So I wanted to add a little bit of color there. I think this kind of controversy about the value premium helps illustrate a lot of the challenges that Ed pointed out in terms of doing the quant work.
Mm-hmm. Yeah, no, that makes a lot of sense.
What else is super interesting is that when you talk to people who are in industry, they'll tell you a lot of the studies that are out there are full of problems, errors, something called p-hacking too, where basically you just run a bunch of regressions, you find the thing that works best, and then you're like, oh, look, it works in the back tests, but you basically just overfit.
Right, you just
so a lot of stuff
fitting for what you want.
Exactly, and you have the data, so you know exactly how to fit it well. And there's been a recently. There's been a big critical reevaluation of the field, coming a lot from the tools that are in machine learning, and just reevaluating like, are these factors actually as concrete as what you guys believe? So that does talk to that as well. I will say one interesting thing though. It did look like those quant fundamental folks, the people that Patrick was talking about, that they were actually doing pretty well for a while before the AI resurgence took hold of the market. So when inflation was a problem, you did see value coming back and everything, and they were doing real well AQR. Now I'm not so sure, because like tech is resurging and everything, but it does beg this question, like, how do you tell?
Yeah.
But we digress, and it's just a very interesting
Yeah.
field. So
Yeah, I mean, well, it's super fascinating, and just to kind of wrap that up, I guess thinking about it as like this kind of scientific integrity in pursuit of this financial data. At least that's in part what I'm hearing from you guys is really interesting. And you think about this a lot. At least I do in other fields like health and the other kind of sciences where the integrity of how this study was designed and where you're getting the data and how you're interpreting the data, is really important. But it's just not something I typically think about in the context of, let's say, finance or economic activity, but obviously applies. So very, very cool. And okay, so let's talk about the platform real simply. What's the elevator pitch? What is Arrow Markets, and what are you guys trying to bring to crypto?
Yeah, it's a great question. So I'll just kind of scratch the surface maybe, and then we can kind of go back and forth and see where what details are worth digging into. But so we have just rolled out Arrow Markets V2. V2 is designed to deliver basically the complete option trading workflow. So it essentially should be a substitute for something like Robinhood at a bare minimum. In addition, of course, there are kind of novel things that you can do when you're building in Web3. And so there are kind of new efficiencies, as well as new kind of product features that can be rolled out in Web3 that just can't be, don't exist. And it's not possible to implement those on Robinhood. So V2, we just we've completely tested the pipes on mainnet. We've opened it up to a small number of people on our whitelist. We've processed several trades. We've processed several settlement cycles. Everything is working. We're super excited about kind of rolling that out and scaling that up over the spring. I will say one of the interesting trade-offs that we had to tackle in order to build V2 was this trade-off between how much trust do you delegate to the blockchain and what are kind of the average quality of prices. And this particularly matters when markets are illiquid. So one of the things that we found, and you can kind of see it if you just look at properties of AMMs and so forth, is when markets are less liquid, when markets are less liquid, the cost of moving trust on chain becomes very high when you're measuring that cost in terms of things like average bid-ask spreads, volatility of bid-ask spreads, and so forth. And so we've really exploited building in this, what I like to call this hybrid space, which there's this surface that developers can explore that connects on and off-chain resources. And so what we've done with Arrow V2 was we're able to work closely with some of our market makers to make sure the pricing is good quality even when markets are liquid, which is not something you can do when you're completely on chain. Right. But the trade-off is then you're building in a hybrid system. You have some components of the circuit that are off-chain. Of course, these components are, there's a lot of redundancy in there. They're cryptographically secure. So we've taken steps to make sure that those off-chain components are not weaknesses. But I think fundamentally, the Arrow V2 implementation reflects this trade-off between trust and quality of prices. It reflects us optimizing that trade-off.
Mm-hmm. Mm-hmm.
Yeah, and just digging in a bit more to that too, and to give viewers a bit of context on what version 1 was versus version 2, especially if you hadn't been part of our community, but instead are part of the vibrant Avalaunch community. What we had been working on before was an AMM. So to give context to what Patrick was talking about, the AMM, essentially what options are, they're promises to folks.
Mm-hmm.
And for people who don't understand what options are, let me just give a really simple
That would
example.
be great. I was going to ask you to kind of cover that, so it would be helpful.
Yeah, for sure. So one of the most popular options that are out there is called a call option. And that's a bet that the price will go up from a particular level that's called the strike price. And it will be assessed how far up it goes at a particular expiration date. So there's two parameters that users have to focus on, which is the strike price, that reference price, and the expiration. A call is a bet about it going up above that reference price, and a put option is about it going below that reference price at that expiration time. So popular one is what we call an at the money call option. So as an example, suppose right now that Ethereum's at around $3,300. You buy an option, a call option at $3,300. So you bought an at the money call option that expires in 1 week. So 1 week from now, and let's say for that you pay around $200 for that, up to $300, $200 to $300, somewhere in that range. So you pay for that, and in 1 week it's assessed how much above 3,300 did it go. Let's say in a week it ends up at 3,700. Great. So then in that case, you've made $400. You've paid something like $250, let's say, and you pocket the rest of it. Not bad compared to the fact that this thing was very cheap. You didn't have to put out that much capital outlay compared to buying a full Ethereum, right? So implicitly in options, there's this thing called embedded leverage. And the cool thing about it is, unlike perps, if the price were to go against you in that week, let's say during that week it was at 3,300, then it dipped for a lot of the week. It went down to 3,000, and then all of a sudden it went back up at before expiration.
Mm-hmm.
You wouldn't have any type of extra funds that you'd have to put in. I like to use this corny term, set it and forget it. Okay.
Mm-hmm.
And that's a really great aspect of options for how people can use them. So getting back to what version 1 was, just with that overview of what options are, what the platform, what the AMM was doing was selling these promises, right? And a lot of platforms that exist focused on the vault creation of options, which basically is just this way that people are locked in to a certain option portfolio.
Mm-hmm.
And there isn't this ability to be dynamic. You can't close positions when you want to or open positions when you want to. You're just stuck in it, let's say, for that week. And that's super restrictive. And vaults did have their heyday for a while, but compared to what's available in TradFi and what people really get excited about, it kind of lost momentum because people wanted more. They wanted more flexibility like they do in TradFi. At least that's our belief and what we found from our market research as well. So what we had also developed interesting vaults. They were, vaults on volatility, on things like call spreads and different things like that, different options plays. There's a bunch of colorful names for them. And we noticed that in order to really offer folks what they wanted to see, what the full capabilities of what options are capable of, that we had to have a more flexible system. And this is where that hybrid system came into existence. This was when we saw, okay, the quickest way to do this, the way to get this to market earliest, is to leverage more partnerships and to work with market makers who offer these types of contracts and are willing to open and close them dynamically, et cetera, et cetera. So that's a direction that V2 took, just to give a bit of context to that and background.
Mm-hmm. Mm-hmm. Yeah, I think this is just something that always kind of ends up happening when you think about decentralized applications, and whether it's finance or games or whatever. You have this initial push to bring all of this stuff on chain and say this can exist on chain, and that's great, right? And then that satisfies everyone because it's like this is more accessible and it can happen. But then you sort of create this demand for more because you've proven it's possible. And so then you're sort of required as a team to decide, okay, where are the trade-offs that we're going to make to deliver the product that we think is most important and is most valuable. And so when you're talking about this hybrid model, it represents a whole host of decisions and trade-offs about the product and where you think the most value is. And I just think it's just really, really, really fascinating, not being locked into a vault. Well, that has like other implications across the protocol, right? And then that introduces conversations around decentralization, and all this, and everyone gets to pick, right, where their optimal set of trade-offs are. And I think when you're talking about the partners that you guys have, and the way that they're able to work with the protocol and sort of remove some of those problems around trust, that I think that speaks to not just a design, but who you guys are as a team and the partnerships and the trust that you're able to acquire from outside of crypto to make this crypto protocol better, that not any old team or every team, let's say, could, right? And so it starts to be this like really unique makeup of your guys' thinking, your guys' relationship, you guys as a team. And I think that's just kind of like what makes a good project really strong and really interesting. And I actually have, Patrick, you had recently put out the V2 kind of primer. You started to talk about it a little bit. Maybe I could just bring it up here, and we could, I don't know, talk through some of this more specifically. I know there's some graphics in here that might be interesting to pull up. But is there anything in here that you think would be relevant to kind of dive deeper on?
Yeah, absolutely. I mean, you were just kind of, I think it's a perfect segue into this section about the hybrid surface, because, you were just kind of mentioning that you think it's interesting how we've kind of opened up this dimension. And of course, we think this dimension is extremely powerful, and being able to kind of build along this on-off chain surface has been what has facilitated the production of Arrow V2. But to your point about hybrid systems more generally, I think it is important to point out, and I kind of say some of this here in this section, that actually hybrid systems are kind of the standard. You have to look for very specific exceptions to find a completely like a completely on-chain application, something maybe like Uniswap. But the underlying blockchains themselves are hybrid systems, right? You have to make decisions about how to trade off things like finality and TPS with trust. So how hard do you want to make it for new validators to come on? What does the onboarding look like? How do new validators bring fiat onto that chain? And so in a very fundamental sense, most of these kind of common infrastructure tools are already hybrid systems. And so I think it's just important to kind of recognize that and be explicit about it. And then once you do that, it kind of opens up, all these new dimensions and makes it gives you a lot more power in terms of what you can build.
Yep. Yeah. It makes a lot of sense. I think less and less these days, but certainly in the past, folks like to try and poke holes or say this isn't decentralized or whatever. But I think it more than anything kind of speaks to a lack of understanding about the stack and exactly what you're talking about. And there's just since day one, there's always trade-offs, right? Yes, Uniswap is a good example of something that's decentralized, but the underlying network, Ethereum, there's all sorts of conversations to be had there around centralization. It's just like, the deeper you go, this conversation kind of always exists. And so at the product level, you have to make these decisions to design the best and the strongest product. And those are the choices that I think really represent what the thinking of the team actually is. And so this hybrid model is, I guess, one of my questions would be, when you look at, because there's other options protocols, right? And some of them are older, and some of them, maybe are more like static. Where do you feel like the biggest differentiators are in Arrow relative to other things in the market? Is it this discussion and implementation of this hybrid architecture? Are there other features that you feel, because obviously this is incredibly meaningful, but are there other features that you feel Arrows has that other platforms don't, that they should? Where do you stand on that stuff?
Yeah, it's a great question. So if you scroll up, there's a little graphic at the top, which just kind of points out 3 items.
Perfect.
Yeah, I'd say this is probably the place to start. And then also Ed knows a lot of, Ed's very good with the details in terms of some of what else is going on out there. For example, Avo, I think would be a good kind of comp for us. So, but I'll kick it over to Ed and let him say a little more about that. But first I would just say, I think, these are the few areas that I think stand out in terms of doing something different that is an obvious improvement over what else is out there. So first, I just want to clarify the Arrow Markets infrastructure. It is a complete microstructure primitive for options. You have all of the ingredients you need to price, transfer, and settle options. Two, and one of the fundamental things we built with the hybrid system is what we call an RFE system. RFE stands for Request for Execution. So we have not seen this before. And it makes specific improvements over requests for quote models, AMMs, as well as centralized exchanges. And we kind of point out a few ways in which these improvements materialize. The RFQ has kind of an extra round trip step that users have to go through before executing a trade, whereas the RFE just goes straight to chain if it's matched, which is a much better UX and is what people expect if they're trading options on a centralized platform. So if you're already an experienced options trader and you come and you try to purchase an option using an RFQ, you're going to have to get used to a different workflow. There's an extra round trip there and so forth. And so the RFE allows us to basically mimic the centralized exchange user experience. AMMs are particularly problematic when liquidity is low. We touched on this before. And so the RFE gets around that by contracting with trusted partners. This keeps prices stable even when liquidity is low. And then relative to a centralized exchange, obviously the ownership is all on chain. Settlement logic is all on chain. The settlement price comes in programmatically. It's not like our market makers set that. That's done programmatically. And so this kind of preservation of self-custody and this programmatic settlement are kind of obvious improvements over centralized exchanges. There's I guess 2 other things that I can touch on quickly that are mentioned in this third card here. One thing that we're really excited about is the system is going to be flexible and can adjust to the level of liquidity in the market. And we have a separate graphic for this. So let's return to this point in a few minutes, not quite yet, but let's make sure we say a little more about that because it's interesting.
Okay, cool.
And then just one other final thing is the way that we've set up the RFE circuit using the hybrid system. There is no multi-chain liquidity fragmentation. There is no multi-chain price fragmentation. At first, the deployment is only on Avalaunch, but as we start adding new chains, the price quality is not going to vary across those layer ones based on the way we've designed the RFE, and that is, I think, also kind of a huge selling point.
Yeah, I'll also add just as differentiators to the competitors who are out there, and I think that you see that a lot of our competitors are going in the same direction because it makes sense when you've been building in the space, understanding the challenges, the flow goes towards there. You get towards like the equilibrium, right? And one thing that we've really prided ourselves in terms of differentiator that's different than just the tech stack focuses on the user experience. We've put a lot of effort, resources into guiding people through buying options on the platform. Even if you don't understand what an option is, you can still fill out or use our guide to express your market sentiment and be presented a few different options, and you can pick the one that you feel is right for you.
Mm-hmm.
So I can give a little preview of that if I share my screen.
Yeah, that'd be great.
But okay, let me do that 1 second.
And we'll come back to this in a bit.
Yeah, so just here is our light view. We have two different views, a light and a pro view. And it asks some pretty basic questions like, how are you feeling? You feeling bearish or bullish? You can pick one of those. You have a particular strategy. So if you have a target price, if you have a certain level that you think that the price is going to break out from, or if you're going to bet on something like support, for example. And each bearish and bullish has a slight variant of these. So with bearish, you get target again, break down instead of break up, and then a resistance instead of a support.
Mm-hmm.
So let's just say I'm bullish OSM with crypto, and I want to think about some breakout strategies. The next question, once I select that category of strategies, is going to be my target there. Where do I think that level is going to be that it's going to break out from? Well, okay, you can put it starts at around the money, near the money, 3,400. And then you also get to choose from the dates that we have available for those expiration prices when that option is going to be assessed for its final payout value.
Mm.
So in terms, once that's picked, then a group of options is displayed, and that group of options you get to pick from, and you can decide, how much risk you want to put on, what is the max profit there. Of course, the one that has bigger upside is going to be more expensive, right? But there's more risk there. And this is all described, as well as when you actually select the strategy, you get a sense of what the payoffs are for the different expiration prices.
Mm.
So you can get a sense of what the risks are more specifically. So that's the current flow of what it looks like for the light mode. And for the pro mode, for people who are more experienced options traders, we have the standard option chain table where you get things like your strike, your buy prices, sell prices. You can see my computer is a little slow today on the internet, but you also have the different Greeks if you want to look into those, as well as the different expiration dates. So with that being said, there's you can, if you're an experienced user or if you're a very basic user and you don't quite know what options are, you can still come to our platform and be able to play around with it and get the type of experience that suits your own level of experience.
Mm-hmm.
So with that, yeah, I just wanted to give a sense. That is something that's very different from any of the platforms that are out there. Most of the other platforms cater to the professional users. They take this perspective that, since Deribit, which is one of the biggest centralized exchanges, or Bybit, that they're kind of king in terms of what crypto options users are out there trading on. That they should copy that type of experience. But we're taking a very, very different perspective that, yes, that makes sense for these institutional players, but it's kind of unlikely at first that institutional players are going to leave those places very soon. So it makes much more sense for people who are new to this to get a better sense of what the risks are instead of just looking at a full table and being like, hey, I don't understand what this is. Let me just play around. And then,
Right.
there can be quite disastrous consequences for that. So I think that, what we're trying to do is really, it is inspired, like Patrick said earlier, by this kind of paradigm that was established from really Robinhood in the TradFi space. And here, in terms of what we're building, we actually made something that's even more intuitive than Robinhood's options experience, in our opinion, of course.
Yep.
But also from our user interviews, we get a ton of great feedback there. So wanted to give that context as well, because for the folks who are watching, I think that's going to be one of the most important aspects. And the second thing that I'll say is, with respect to the stack, on what's really important for them is the fact that our prices are competitive. So because of how we've structured certain KPIs with market makers, as well as the RFE system that backs our protocol, there are two things it does. So the RFE system, it reduces the stale prices that market makers are exposed to, while allowing users to specify a slippage tolerance. This is very different from other RFQs that are out there. So what does that feed back into? Well, because we're kind of allowing both sides to be less exposed to risks in this way, for the market makers, it's saying, oh, okay, I don't have to put a quote out there that when prices move, I'm still going to have to honor. I'm going to have a very low latency in terms of the quotes that I'm putting out there. And so what does that mean? I can charge a lower price right now because I'm not worried about the fact that this quote that I'm leaving out there is going to be stale. Because if they are participating in a system like that, it's kind of counterintuitive, right? People might think, oh, it's better if, for users, if they put out there a stale price and then the price jumps up and then, okay, user gets a good deal. But no, market makers are smart. They will just charge more on average for those because they know that, they don't want to be subject to those risks. So now even when the price doesn't go up in that time frame when that quote is out there facing the user and things are stale, they're just going to get worse execution. So the RFE really is a way to circumvent that and lower the latency for those stale quotes that are out there. And that really means a lot for us being competitive with respect to the prices that users are facing.
I would also just say quickly on all of this point, and I think it's really important that Ed emphasized how much work we've done here on the UX, because this really does stand out from our standpoint. So I think you asked about the team earlier, and I talked about the quant and the dev. So I also should just take a minute to shout out our CPO, D-Raj, who has done an enormous amount of work on the UX. And then also we have a whole team of designers, front-end engineers, and also QA. We are doing continuous QA, right? So multiple times a week we're doing QA. We're doing user interviews with users in our Discord channel and so forth. And so the team who is responsible for producing this extremely impressive UX, it's important for us to recognize them. They've been incredible.
Yeah, exactly. And they've been at the forefront of a lot of our growth as well. So we have an excellent growth team, a biz dev team, and there's a lot of intersection with the design and working in the UI, UX. So that all really has a symbiotic, seamless relationship. And there's a back and forth where we're always, like Patrick's saying, QAing and also getting users' perspectives. Like we reach out to the community continuously and also provide rewards for things for their feedback. Say, okay, what can you tell us about how you're coming to this platform maybe for the first time? Let's get on a call, with some of our designer QA people and watch you actually interact with it. And that's been really informative in terms of tuning what the experience is like for folks and understanding for us, right? Internally, the team, even though we have a focus on this, we get so used to the product, right? And we already know a lot about options, right? By virtue of building this, where, when we see other people interact with it, some things take us by surprise and we're like, oh yeah, that is a good point, what they're saying, or I can see how that might trip up a first-time user, whereas that never occurred to us while actually developing it. So you'd be surprised how much it really helps to get those perspectives, and we're really happy to have a vibrant community that can help out and guide us in that way, help build the product.
Yeah, I mean, I really believe that the emphasis on UX UI is what, like, largely at least defines sort of this next generation of DeFi apps, right? Because think there's this temptation to say, okay, well, listen, the technology is hard enough. It's now it's centralized, it's on the blockchain, but it's certainly not going to get you further than that, and certainly not going to bring users over from TradFi or Web2 or whatever. There's only so many folks that really value that enough to put up with terrible experiences, stuff that feels unsafe, unclear, and so I think it would be really hard to overstate the importance of good, strong UI that actually rivals or even surpasses things that exist in the traditional world, let's say. Um, Patrick, was there something that you wanted to go back to in the V2 document, or are you good to move on?
There's one point I think that's worth making. It's a little bit kind of forward-looking. It's a future version type of thing, but I also think it's important because it helps kind of illustrate what our longer-term vision is. This consolidated liquidity point is important as well. This is also a little forward-looking because, like I mentioned earlier, we're only on Avalaunch at first, but as we roll out new deployments on new base layers, the liquidity does not get fragmented in the sense that the activity on Arbitrum versus Avalaunch is not going to affect the price of an option you're picking up on Arbitrum versus Avalaunch, because our market making partners are quoting based on basically the liquidity of the best depth spot venue. So they're doing on their side, they're doing what they can to bring down these hedging costs in terms of creating these option liabilities, and then that's just passed on to the users no matter what chain they're on. So that's important. The one I wanted to talk about is the AMM to LOB continuum, and so this I think is it's quite subtle the way that it works, and so it's a point worth spending a minute on. It's again forward-looking, so I just want to clarify the initial version of V2 that's live right now on mainnet is the RFE version, and so all of the quotes that are happening on the system are happening through our contracted market-making partners. But over the course of the next few months, we'll be rolling out the infrastructure for an automated margining system. As that automated margining system gets rolled out, then what that means is more users will be able to provide price quotes as well, not just the trusted market making partners. And so that's where you get this very nice ability to move between these two limits in terms of the microstructure as a function of the liquidity. So all the way on the left side of this diagram, you could think of the RFE, you could think of this as kind of the minimum liquidity environment. All of the quotes are coming from the contracted market makers. We know those prices are good quality because of all the KPIs we've imposed. And when the markets are liquid, some of those prices are kind of socialized in the sense that some of the platform fees go back to help cover the market maker costs. So we know that those prices are well behaved when there's minimum liquidity, but it's still a concentrated market. All the way on the other side, on the right-hand side, you can think of maximum liquidity. This is a scenario where every trader can either buy or sell. I can write options, I can buy options, whatever. And you can think of this as kind of the maximally liquid limit. And as we roll out the margin system, market liquidity will manifest in terms of different kind of compositions of these user types. So when the markets are less liquid, even if we have the margin system rolled out, it will still look a lot more like the RFE. However, if more people are coming in and providing prices for that particular market, the microstructure looks a little more like an LOB than an RFE, right? And so I think this is a point that I think is very nice. Mm-hmm. The realized market microstructure for Arrow at any given point in time is going to be a function of market liquidity, because market liquidity will determine what fraction of each type of participant actually shows up in the market. So this is something that we're super excited about, this flexibility, this kind of adaptability to market liquidity.
Mm-hmm. Yeah. I wonder, or I'm just thinking, because you guys in some ways like emerged or came from TradFi, and now you're squarely in DeFi, right? But you still sort of think about and straddle both worlds because you kind of have to. And would you be able to like characterize at all the sort of sentiment around what you're working on with more TradFi folks? Like, in 2024, is there still a lot of pushback or skepticism? Or do you feel like more and more people are really starting to see the value in these more decentralized, more open systems?
Yeah. I think, I mean, in my experience, people are in TradFi or in academia are open to the idea that there's something here in terms of the technology that can contribute value. And so when you start having fairly technical conversations with some of these people about, specific architecture decisions or specific microstructures, they're fully engaged and interested and on board. And so that's true. But I would say simultaneously, there is still kind of a dark cloud over crypto in terms of the way people in TradFi and academia think about it. And that is a hurdle we have not overcome yet. All of the FTX, SBF stuff, all of the kind of scams. And frankly, now that this new bull, we're entering in a new bull cycle. I mean, assuming things don't completely crater here. It's been a little choppy the last couple of days, but this bull cycle has been, frankly, partly characterized by things that I was hoping not to see. So lots of new meme coins, things like, I don't want to I guess I shouldn't mention the names of any specific projects, but there are projects that are now being, declared to be unicorns, which are kind of clearly just like DGen-y, a non-team gambling type of things. And so we may still be a long way from, having people in TradFi or people in academia have kind of a productive view about the crypto industry as a whole. So that's still a challenge. But like I said, when you start talking about some of the specific technical details with these people, they're very engaged.
Yeah. One of the things I'll also add is, and one way that I think is the best to get both TradFi on board, as well as some jurisdictions like the United States, and regulators like the Federal Reserve, there is a lot more transparency on chain. And the more that you can make the system towards decentralization, the more that you get to that ideal, the more that you can say, hey, look, to the regulators, you can say, hey, look, we can actually run experiments. You have certain stress tests you want to see. Well, what did you have to do before in the regular financial system? You had to essentially trust the institutions to go within their risk management divisions, try out some scenarios, and then report back to you what they see. And sometimes there's not a lot of transparency. Actually, always there's not a lot of transparency there. There's a lot of trust on what those people are doing internally. And sometimes when they're in the red, those different institutions, they might fudge some numbers. So that being said, if things are more transparent, more towards a decentralized side, the Fed could come in once they have the tooling available. Of course, it's going to take years and years and years. This is not something that's going to happen overnight. But they could come in and they could say, well, how robust is this financial system, the big players that are on here? Let's fork it. Let's play with it. Let's see what happens if a certain liquidity shock occurs. Do you see do you see this kind of spread of failure across all the different protocols? That's something you can do explicitly, and that's super powerful. And if we could get the main regulatory bodies to see that, that would be a big win. And I think that we would have a lot more trust and transparency that way going forward. So that's another aspect. Of course, it goes towards the ideal of full decentralization, and that's difficult to attain fully sometimes. But it is a worthwhile pursuit, a worthwhile thing to also extol to TradFi and to regulators who might be reticent about this emerging technology.
Yeah, makes sense. I always think it's just kind of a funny conversation, simply because even with things like gaming or whatever, there's like gamers that don't like crypto. It's like it's not like there aren't strange, untoward, risky things happening in traditional finance, and so it's just, whether it's crypto or traditional finance, it's representative of the people involved. And these are just kind of like platforms. And when a lot of people are using them, they represent the best and the worst of us, just like kind of anything else. So I always just think it's a funny conversation, like this is somehow different. But that's neither here nor there. Since we're doing the IDO on Avalaunch, we would be remiss if we didn't at least talk about the token, the utility of the token, the place in the kind of system as a whole. So I don't know which one of you guys wants to cover that, or maybe both of you. But we should give the listeners an idea of how to think about the token, and why someone might want to acquire it and hold it for a really long time.
Yeah, it's a great question. So fundamentally, the token is on its own. Actually, the token doesn't do anything. But if you are an eligible user, and you own the token, you can stake it in the platform. And if you are a staker, and of course, to be a staker, our lawyers have drafted terms of service and so forth. It's not available to everyone, but if you are eligible to be a staker, then the way it works is you take the token, you lock it in our staking contract, and then as a result of being actively staked, you get a pro rata share of the platform revenue generated by the option trades. You also get some community rewards. So a significant fraction of the overall token allocation was kind of earmarked to pay in terms of emissions for some early users. We don't. The goal is not to do some ridiculous 1,000% APY with these emissions or something. I this is something we want to be able to have kind of dry powder there in terms of those emissions for years. Mm-hmm. So we're not going to go overboard, but at first, before we fully ratchet up the trading value on the platform, some of these emissions are going to be important to keep that APY at a competitive level for stakers. So fundamentally, token on its own doesn't do anything, but if you own the token and you're eligible, you can stake it, and then you get rewards by doing that.
Mm-hmm. Mm-hmm. Yeah, I think that kind of design is probably like just one of the more compelling things about what we're able to do with these protocols in general. I think it speaks to the real value of the users and the people interacting with it, and you guys are growing because of the people who are engaging with the platform in many ways. And so I think that kind of utility is important, and there's a reason that we see it more and more, and it's quite impactful. And so, was there? I mean, how much has the token design evolved over time? Was that kind of always the plan? Was there other thinking? Because the utility of these tokens, or what they end up doing, it can be kind of like many things in crypto, trendy, and maybe that trend is just representative of the current best thinking. But things like governance tokens or whatever, and so I'm just kind of curious how the thinking around the token maybe has evolved over the last couple of years.
Yeah, in some ways it's stayed the same in the sense that we always thought of it as a way for eligible users to get access to the proceeds generated by platform activity. That being said, in earlier versions of Arrow, when we were working on the AMM instead of the RFE, and we were kind of doing all of the delta hedging internally, programmatically, there were kind of more scope for the token to do interesting things in terms of interacting with the liquidity pool and so forth. So I think along those dimensions, our thinking has evolved. we're kind of, this approach we're doing now is kind of an Occam's razor approach. It's just extremely simple, and also upgradable. We can add more functionality down the line if we want. So we've kind of we've made it flexible. But I think where we are now is it kind of captures some of the essence of what we've always thought about the token. But it's also, a very just kind of simple Occam's razor implementation in terms of delivering that specific type of utility.
Yeah, and it's important to mention that the users really do have to put it to work. They have to put it in the protocol. They have to stake in the protocol. There may even be liquidity events where a portion of those might get liquidated to cover some obligations of the options. That is something that we're currently designing and building in to the operation of the token. But at the very core of it, you have to put your token to work in order to get those rewards. You have to do something with the token in order to get them, and that's an important differentiator than just holding it and gaining. So we like that aspect. That's been a part of the design from the very beginning, like Patrick mentioned. And from this aspect of doing something for the protocol, having an economic value to the protocol, that's an extra dimension that it can be put to work.
Got it. Cool. Okay. Well, looks like we're actually past the hour now, so I want to be, mindful of your guys' time. We actually managed to cover a lot of really interesting stuff. I think this has been a good conversation, and we really appreciate your time, appreciate your engaging the community, hosting it with us. It's a real honor to be just a small part in your guys' big long journey. So thank you for that. And the last thing I'll just kind of ask is for someone that's watching this, and for someone that's participating on a platform, and they're really excited by what you guys are doing. Outside of participating in the sale, let's say, what would your recommendation to a community member or a user be to just kind of maximally engage, help, interact with the protocol? You guys are talking about user feedback. What's the best way to be a part of your guys' community going forward?
Yeah, it's a great question. I would say, follow us on Twitter at Arrow Markets, but also I think it's probably, in terms of interacting in a meaningful way on a day-to-day basis, that's probably the Discord server. We have some channels there for different types of kind of UX discussions, and kind of a bunch of forums for community members to interact with the founders, with the devs, with the marketing team, and so forth. So in terms of being involved on a day-to-day, I think the Discord is probably the place to go.
Sure.
Yeah, and there's a bunch of areas that folks in the community can work with us together, not just the UI UX. I think that's like the easiest. That's kind of the open access way of being able to get directly involved, get rewarded, etc. Being an active member of the community. But there's tons of things with respect to building content to explain the platform, to get out there, to help us get the message out. Those are super interesting, and you can get involved with our content moderators on Discord, get talking to them about that. And then also certain people, there are tons of people out there in our community who we've talked to who are experienced options traders. And when we have conversations with people like this, there's tons of useful information that flow back to us. And we really appreciate that. We really like that. So there's a lot of different ways to get involved, all the way from improving how, even if you don't understand the platform, telling us why you don't understand it, right, and what could be better about it. Or if you're a seasoned professional, getting in contact with us and saying, hey, I'd like to see this type of product on here, or here are some ways that you could improve the competitiveness of prices, et cetera, et cetera. So looking forward to engaging the community and really talking to folks who are out there who come from different walks of life and open to those discussions.
Awesome. Okay, guys. Well, great. Well, super excited for the launch. We'll definitely do this again soon. We'll, look back, we'll look further forward, and, we're in this for the long haul. So super excited just to see where we're at in 6 months or a year. So we really appreciate it.
Thank you. And we're really excited to be part of the Avalaunch team and, family of different protocols that have participated. You all have such a vibrant community, full of Avalanche originals, right? So it's just so cool to get involved and come to the community in this way with a bang.
Very cool. All right, guys. Well, have a good rest of your day, and we will talk soon.
Amazing. Thanks so much, Mark. Cheers.
Thanks, guys. Bye-bye.